Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is April 28th, and we are going to take a look at Tesla's stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I am not a financial advisor, so please do your own research and make your own decisions. Tesla is down $4 today, 0.45%, closed at 877.51. Post-market, we are down $11.33, 1.29%. Post-market, we are at 866.05. Let's look at what this looks like on the chart. Okay, so we have a red candle. We have a super long wick at the bottom here. So during the day, we had a low of 821. So we went as low as 821. But then when we have a long wick here at the bottom of a candle, it means that this is buying pressure. So the price of the stock went down, but then was pushed back up by the buyers. And this 821 is not too far from 805, which was one of our double support here at 805. So there are people willing to buy Tesla when it goes down to that level. This is what this candle is telling us. The body of the candle is still above 874.35, and we broke during the day 886.41, but we could not close above it. So this is still a resistance. 886 is a resistance, and 874.35 is a support. And we did not go back above this upward support right here. This is an upward support. We could not break above it yet. So we came right next to it during the day. Yesterday, we broke above it. Today, we did not break above it. So we are making a lower high right here, and we made a lower low. This is what happened. Let's go see on the 1 hour chart how this played out. We have this very interesting downward channel right here on the 1 hour chart. And we went today and pretty much bounced on this lower support of this downward channel. So big red candle during the first hour of the day. And then we came back up and we got stopped, as I mentioned, at 886.48. And we crossed it during the next to last hour. During the 7th hour, we crossed it during that hour, but then came back down. And now we have a red candle and we are right smack between these two numbers that I was talking about. Going back to the daily chart. So let's look at our indicators. We have stochastic at 16, came back up a little bit, and everything else pretty much is bearish. Since we have a bounce right here on the support, we should be able to at least maintain ourselves and go test the other side of this downward channel. This is what we need to look at. And I will color this resistance purple because this is really what we need to cross. This is the important resistance we need to cross. And we also need stochastic at over 60 while we are going to cross it. If not, what can happen is that we can have a movement till this point here, let's say at 921, and then the stock can still go further back. We should be very careful. We need a cross of that resistance for 1 or 2 days, depending on how risky you want to take it. On April 21st, we had a break for not even one day. We broke it during the day, but we closed inside it at the end of the day. So this could happen again. So we need to break outside of that downward resistance. We need to close that day outside of that resistance. And we also need stochastic. And it would be better if we had even 2 days outside. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. You can click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow and I'm going to tell you à la prochaine.